Everyone is watching flashy AI software names right now. The headlines, the buzzwords, the promises. But AI doesn't actually function in the real world without a hardware layer underneath it. A layer most investors ignore because it isn't exciting and it doesn't move fast. That disconnect is where mispricing often begins. One quiet semiconductor company sits right in that overlooked layer today, trading at a price that suggests the market hasn't fully updated the story yet. Himax Technologies trades around $8 per share, and on the surface, many people think they already understand it. A display chip company, cyclical, boring, tied to slow-moving industries. That perception is exactly why it's worth looking deeper, because behind the label is a business quietly positioning itself at the intersection of displays, imaging, and ultra-low-power artificial intelligence, areas that don't grab attention early, but matter long before the headlines catch up. Himax is a fabless semiconductor designer. It doesn't run factories. Instead, it designs the specialized chips and imaging processors that sit inside screens, sensors, and vision systems used across multiple industries. These are not consumer brands. These are infrastructure components, the kind that only get noticed when they fail or when demand suddenly accelerates. For years, the backbone of Himax's revenue has been automotive display driver chips. These chips power the digital dashboards and cockpit displays inside modern vehicles. It's a stable business, but not a glamorous one. And recently, it's been uneven. Automotive demand has softened. Inventory cycles have weighed on shipments, and that's been enough for the market to lump the company into a slow, cyclical bucket and move on. That's where the misread begins. Because while near-term demand has been choppy, Himax hasn't been standing still. Over the past few years, the company has been investing heavily into technologies that move beyond simple display drivers and into intelligent sensing and vision. Sensing and vision, the kind of hardware AI systems rely on once they leave the cloud and enter the physical world. One of the most important developments is Himax's ultra-low-power AI sensing platform. This technology combines custom AI processing, imaging sensors, and optimized algorithms into a package that can remain always on while consuming minimal power. That matters because the future of AI isn't just data centers and chatbots. It's embedded intelligence devices that see, detect, interpret, and respond in real time. As AI expands into vehicles, wearables, security systems, industrial monitoring, and smart environments, power efficiency becomes a constraint. You can't run heavyweight AI models everywhere. You need specialized hardware that does one thing extremely well, quietly and reliably. That's the layer Himax is targeting. Recently, the company has been showcasing how this technology applies across multiple real-world use cases. Automotive imaging systems that enhance driver awareness, smart sensing for security and access control, gesture recognition, and vision-based interfaces. Compact imaging solutions designed to operate continuously without draining power. These aren't speculative concepts. They're working systems being demonstrated to partners and customers. Himax is also extending its reach into advanced microdisplay technology. Microdisplays are critical for augmented reality and wearable devices, where brightness, efficiency, and form factor all matter. The company's work here reflects a long-term bet that displays won't just get bigger or sharper, they'll become lighter, smarter, and more tightly integrated with vision systems. Another area drawing quiet attention is imaging for aerial and industrial applications. Through its ecosystem, Himax has been involved in combining thermal and optical imaging with edge AI processing. That combination allows machines, not humans, to interpret visual data in real time. This is the kind of capability that matters in environments where speed, autonomy, and accuracy are critical. In healthcare and wellness, ultra-low-power AI vision is being used in monitoring and tracking systems designed to operate continuously without intrusive hardware. These applications may never trend on social media, but they represent the kind of steady, practical adoption that infrastructure companies rely on. Now, at this point, it's important to stay grounded. Himax is still navigating a challenging cycle. Display markets are competitive. Automotive timelines move slowly. Revenue visibility isn't perfect. That uncertainty is real, and it's part of why the stock remains under pressure. At the time of recording, this stock is trading around its current level, but prices move quickly, so it's always important to check real-time data before making any decisions. That said, the market often struggles to price transition phases. When a company shifts from being viewed as a commodity supplier to a differentiated infrastructure provider, there's usually a lag. The old narrative sticks longer than it should, even as the business underneath starts to change. What makes this setup interesting is optionality. If Himax were only a display driver company, the valuation might make sense. But layered on top of that foundation are emerging platforms tied to AI sensing, machine vision, microdisplays, and embedded intelligence. These areas don't move in straight lines, but when adoption reaches scale, they tend to reprice quickly. Halfway through this breakdown, it's worth saying this. If you value calm, research-driven analysis like this, focused on real signals instead of hype, consider subscribing. It helps support deeper coverage of overlooked U.S. stock opportunities with real-world relevance. Looking ahead, the company's future depends on execution, turning demonstrations into design wins, turning partnerships into production, and turning specialized technology into repeatable revenue streams. None of that happens overnight. But infrastructure stories rarely do. From a valuation standpoint, the stock reflects skepticism, not exuberance. The market isn't pricing an aggressive growth, it's pricing caution. That's often where asymmetric setups begin, when expectations are low and progress doesn't need to be perfect to matter. Of course, risks remain. Semiconductor cycles are volatile. Competition is intense. Adoption timelines can slip, and near-term financial results may remain uneven as markets normalize. This is not a hype trade, and it's not a guarantee. But it is a company operating in layers of technology that tend to matter more over time, not less. Displays that become intelligent, sensors that see and interpret, AI that runs at the edge, quietly, efficiently, and continuously. In situations like this, the story isn't about what's exciting today, it's about what becomes essential tomorrow. And those shifts rarely announce themselves loudly. As always, these price levels reflect where the stock was trading when this video was recorded. Conditions change, prices move, and investors should always review current data and fundamentals before acting. For those who look beyond surface narratives and focus on infrastructure before it becomes obvious, Himax Technologies represents a case study in how misunderstood businesses can quietly evolve while the market looks elsewhere.